It's very difficult to give an outlook at the moment on a short-term basis because we haven't often seen situations like this where large parts of economies stop. We invest for the long term. So I think when we get through this stage, which is obviously very tragic, we'll be looking at a very, very low bond environment. And we'll be looking at very attractive equity yields and valuations. And I think you'll see people return to equity markets, but they need to understand this stage of the cycle first. Yes, in terms of the portfolio and positioning, I think one thing that's worth saying is, although we have higher yielding stocks, one of the things we focus on is balance sheet strength. So over 90% of the portfolio are investment grade, and one of the key things that people worry about when we have this kind of volatility in markets is the effect on the debt markets, the ability of companies to finance, and so that's definitely that's not an area that we're worried about from the portfolio, because of these investment grade companies generally be the ones that throughout the cycle get funded. So in terms of the portfolio and the threat of the virus this year, we have positioned the portfolio quite defensively over the last year, and we always focus on the long term, so strong balance sheets, good cash flow. And so I think the businesses that we have are quite robust to take any kind of volatility in the economic cycle. In terms of the specific threat of the virus, we've quite proactively looked for businesses over the last few months, kind of before it really built up to head of steam, where we felt that they could have direct operational impacts on the businesses through lower volumes of passengers travelling, these types of areas, and we've removed those from the portfolio. So I think the most obviously impacted areas of the portfolio have been significantly reduced over the last 2 months. Preparing for these types of events in markets, it's very hard to kind of fully anticipate everything that comes at you. And for us, in our portfolios, we've always viewed diversification by geography and sector as one of the key abilities that to help diversify clients from these types of threats, and also take advantage of the opportunities that they might throw up. And so in addition to looking at the sustainability of business models, strong balance sheets, in those areas, the diversification by sector and region is quite crucial to being able to weather these types of storms.